Hello, everyone. Thank you so much for joining us today on our Introducing LendSure's Fix and Flip Financing Program. Now, as questions come up during the presentation, as I'm sure they will, please go ahead and use the little chat function, and we will answer your questions as they come up. And also, we'll have an additional time at the end of the webinars to answer all of your questions. With that, I'd like to introduce today's speakers, Stu Marvin and Andre Plamadela. Sorry, Andre, if I butchered your name.
Close enough.
Take it away, Stu.
Thank you, Rose. As Rose mentioned, I'm Stu Marvin. I'm one of the co-founders of LendSure Mortgage Corporation. We've rolled out a new product, which is Fix and Flip, which we think will be very valuable in a rising rate environment when some of the rate term refis seem to be waning somewhat with the increased rates. So we wanted to cover this new product. We're excited about offering it. And Andre brings a wealth of experience, been on board 9 months, has helped us build the program. And so we're going to talk a little bit about LendSure, LendSure's Fix and Flip program, the Fix and Flip market, program guides, loans, process. Then we'll get a little bit into other opportunities, other loans that LendSure offers, and why partner with LendSure. As Rose mentioned, we're going to do a Q&A at the end of the session, which should probably last 20 to 30 minutes. A little bit about LendSure. We were founded in 2015, April, but we have a long history in the mortgage company. The mortgage business, probably my partner and I go back probably, I'll say 30 years, but probably closer to 40 years in financial businesses and mortgages. So although we launched LendSure in 2015, it wasn't our first experience building a mortgage company. Prior mortgage companies have, prior to selling them, had achieved thousands of employees and were national companies also. LendSure is headquartered in San Diego, California, but we have big centers in Atlanta, Georgia, Rhode Island, Utah, and our small office space in Missouri. Our loans have been securitized since 2017, and I'm talking about the non-QM loans. And to date, we've produced over $2 billion in non-QM mortgages. Highly experienced team, and we're lending in 44 states, and we continue to grow. What we do, we focus on, as I mentioned, non-QM loans, and we're on making good loans to quality borrowers that do not fall into a conforming loan program. So that's a Fannie, Freddie, VA type government program. We specialize in bank statement, asset depletion, asset qualifiers, DSCR, various sources of income that's hard to document. So we serve a very high credit worthy borrower that by their situation or property type typically wouldn't go into a bank or get a conforming product. Often it's high balance loans. A little bit about our $2 billion book of business. You want to go back a minute there, Rose. Our average FICO over the $2 billion has been over 700, our average LTV below 70. We also do ITINs and foreign nationals, so we'll get into more what we do at the end of the slide deck, but you can see we do a lot of niche products. What we don't do, as I mentioned, is we don't do Fannie, we don't do Freddie, FHA, VA, HARP, and really the government mortgage programs. Okay, Rose. It's interesting. I have an investor that I sell a lot of loans to, and they've been a big investor in the fix and flip market. And for years, they have been asking me to get in the fix and flip market. We had been growing the non-QM business absent of the fix and flip market and had much success doing that since 2015. So I really didn't want to embark upon the fix and flip product, which tends to be a higher touch product until we came upon Andre, who had enormous experience. A little bit about the legacy of my partner and myself. Prior to launch in LendSure, we actually had a business where we fixed and flipped homes. We did hundreds of millions of dollars, 500 plus properties. We raised 4 different funds. We obtained some money from Wall Street, gave them a nice return, managed a fix and flip business for about 6 years. It was highly successful, and we saw the need for financing of renovated homes, and that's when we embarked on LendSure Mortgage Corporation. But we have a lot of experience in fix and flip. It's been a hot market. You see a lot of the homes being traded today are being sold to buyers who would like to buy them, rehab them, and either sell them or turn them into a rental property. So the product we're about to overview for you is right in line with that, and it should be a good product you can add to your arsenal of products that you're offering.
Sorry.
Yeah, that's all right, Rose.
There you go.
I will let Andre pick up from here, and I'll stay in tune for questions or anything that comes up.
Thank you, Stu. Thank you, Rose. Hello, everyone. My name is Andre. I help LendSure with running the fix and flip program. A little bit, just like what Stu mentioned, the program is designed specifically to serve real estate investors that are looking to leverage the purchase and construction of the project, and with the intent to exit with the sale of the property at a profit, or to refinance into the long-term rental DSCR loan. We welcome any level of experience, and we try to make a decision on a term sheet within hours, not days. Next slide, please. So a little bit deeper into what the program offers. As I mentioned, we welcome any level of experience. Plus, we work with clients with a credit scores as low as 660. Our interest rates start as low as 6.99%. The type of properties that we primarily service are single family and multifamily. The mixed use properties are also considered, but these are on exception basis. The program offers up to 85% of the purchase price and up to 100% of the construction cost on some loans. The total loan amount is up to 85% of the total cost. And these are short duration loans with 12 months interest only payments. So can we just go back to the previous slide? Just to clarify the information on this slide, the program offers up to 85% or up to 100%, but it does not offer necessarily 85% and 100% of the construction cost on every transaction. Same goes for the total 85% of the loan to cost. On some loans, we are able to reach 85% of the total cost. On some loans, we have to stay within 75 or 85%. So everything is reviewed on a case-by-case basis, and terms are issued on a case-by-case basis. Next slide, please. So the process to apply for a loan is very simple. We're not looking for the 1003 form. We built a simple application form. It sits on a LendSure website. It has 3 sections, one for the borrower, one for the property and transaction, and one for the broker. So these sections, once completed, provide us enough information on what overall transaction scenario is, and we are able, based on this information, to put together a term sheet and share it with loan officers and brokers, who in turn share it with the client. And if client is happy with the terms, they just sign the term sheet, and then we move into the underwriting. As I mentioned before, we try to get back with a term sheet within 24 hours after the application is received, unless we have some questions, and we try to clarify them with the broker or loan officer.
Okay. Andre, Edgar wants to know if you can give an example of something that is a 85% of purchase, but 100% of cost, but a total of 75 to 85%.
So I'd expect that 85% of purchase and 100% of cost would not solve for 85% total loan to cost. I'd say there are scenarios where we able to go to 100% of cost on construction end. Typically, these are for small construction budgets below 25,000 construction budgets, where we and the large purchase price, where we can offer maybe 80% of construction and maybe 100% of 80% of purchase and 100% of construction, and the purchase component is large enough and outweighs the construction component, and the construction component, whether we lend 85% on that or 100%, doesn't move total loan to cost by much. So, but we still need to solve for 85% total loan to cost.
Yeah, this is Stu Marvin. Also, it's dependent. The terms are dependent mostly on a couple factors, as Andre mentioned, but two big factors are the experience of the investor. If you have a very experienced investor with a long track record of fix and flip, it's their business, they're very successful, they'll tend to get higher LTVs, lower loan rates, and just because of the history and the experience and the professionalism, it's clear that they are not a novice. They've mitigated much of the risk by the properties they have purchased or the experience they have. On the other end, as Andre mentioned, we'll take brand new, never fixed and flipped a home in their life people that have no experience. We consider those, but obviously, if you're brand new, never fixed and flipped a home in your life investor, you're doing it for the first time, that tends to bring more risk. So the 699 would not be applicable. Or if the property is such a nature that the collateral is not as strong, it wouldn't bring as low a rate. So each transaction is reviewed, and I think the market terms we convey in the term sheet, as it's indicated, are very much market based on the property and the experience and the transaction. So
Thanks.
go ahead, Rose.
Rudy wants to know if the final LTV is based on appraisal on the finished product.
We do. We primarily lend based on a cost. So we primarily try to solve up to 85% of the total cost. But we also have to be within 70% of the after repair value. So whatever the loan on a cost basis results in dollar value, we need to make sure that whatever the expected after repair value, our loan is within 70% of that after repair value. And the way we look at the values, we ask our appraiser we ask appraisal team that we work with to provide us two values. First is the as-is value to make sure that the purchase price is sensible, and then we ask for the after repair value, and the after repair value is determined by the as-is value plus the cost of renovations, and an appraiser is able to provide us an assumption on the after repair value. So
yeah, this is Stu again. If you have the right property and the right experience and the right renovations and purchase price, the after repair value should be significantly higher than your cost of purchase and your cost of construction. So it's typically not a limiting factor. If you find your after repair value doesn't work within the formulas we're providing for purchase costs and then after repair value, it's probably not a great property. If you understand what I'm saying, is the concept here is you buy a property that's in need of repair, you repair it in a professional manner, and the after repair value should increase significantly based on those two being achieved.
Mark wants to know if they select the appraisal, or does it come from an approved appraiser list?
We work with few appraisal management companies that are savvy in a fix and flip world. So we order appraisal, and this guy's been doing that for years, and they have a panel of appraisers they work with in most states.
Okay.
So And this is how the application form looks like. Again, it's not a 1003 form. We're not looking at clients and at the borrower's income. There's something blocking the application. So as I mentioned, it has just 3 simple sections. One for the personal details, one for the transaction details, and one for the broker details. We at this stage, we're not running credit. We're not charging any application fees. There is nothing to submit along with the application. It's just some of the information is really educated assumptions, such as estimated credit score, estimated after repair value. So that information should be sufficient for us to put together a term sheet, which acts as a commitment to lend if everything holds together. Next slide. That's the same application, but for the refinance transaction. The previous one was for the purchase. It's a similar one for the refinance. Next slide, please.
And these are all on our website.
Yes, this sit on a LendSure website. Once the application received and we issue the term sheet, if client is happy with terms, they sign the term sheet, get it back to us. And the first step of the process would be for us to run the credit and background reports. We check that there are no surprises there. We ask for purchase contract and the scope of work. We order appraisal. We order construction scope of work feasibility inspection, and we proceed with the remaining underwriting. We ask for bank statements. We ask for a title report. We ask for property insurance. If we prefer that borrowers, that clients borrow into an LLC rather than individual, but we still can lend to an individual. So if it's an LLC transaction, we ask for LLC documents. There are no additional fees for the LLC underwriting. And as we clear underwriting and we start preparing for closing, our legal team reaches out to client's attorney, to the title company, settlement agent, and they coordinate together the closing. We look at the HUD, look at the settlement statement, make sure all the pieces are there, and proceed to closing. So that just, again, to touch on what we collect typically, if there is a borrowing entity, we ask for borrowing entity documents. Typically, 2 bank statements is enough for us to see that borrower has sufficient funds to close on the transaction and to carry it for a certain period of time. Just like on any other mortgage transaction, we want to see the property and liability insurance. We also want to verify the client's experience. We will be providing the experience form. It's a simple spreadsheet with a table of past clients' transactions. I will try to verify the experience myself through going on some county websites, trying to tie it back to the borrower. If I have any questions, I'll reach back to the borrower to help me do that. And of course, driver license, social security card helps me to run credit and background. Next slide, please.
Is there a max? Rudy wants to know if there's a maximum number of properties that can be financed by a single borrower.
Yes, we'll limit ourselves to 3 transactions on a fix and flip with the same borrower, or 3 million to the same borrower.
Okay.
So after the funding, client begins construction, and the construction. So let me step back. Sorry. Our total loan amount consists of 2 components. One is the purchase component, another is a construction component. So at closing, we will be disbursing funds to help borrower to buy the property, and the remaining, the construction piece of the total loan amount, will be sitting with LendSure as a construction holdback, pending submission of the draw requests from client. So post-closing, when client starts doing some work on a project, client will be submitting us the draw request for costs incurred to date. So, for example, a month after the closing, client did some rough electric, rough plumbing, did some demolition, paid contractor $10,000, and submits a draw request for the $10,000 of cost to date. We will be sending back inspector to verify that the progress is actually there, that the rough plumbing, rough electric, and demo actually completed. We will be asking client to provide us the paid invoices to contractor for that work. On some draws, we will be asking title companies to do the rundowns to confirm that there are no liens jumping in front of us post-closing or after the previous rundowns. And these liens could be the tax liens or could be mechanic liens from the contractor. And once everything is verified and approved, we will be reimbursing client a percentage of the cost submitted, and that percentage typically equals to the ratio of the loan to cost. So if we issue, if our loan was 80,000, for example, on 100,000 construction, then our loan to cost ratio is 80%. So on 10,000 draw request from client, we would be reimbursing roughly 8,000 back.
Okay. Andre, we have a couple of questions from a couple of different people on the maximum number of loans per borrower. Is that concurrent or is that over time? So if in other words, if somebody completes a project, can they get additional loans, or is that over the life?
Yes, of course. If it's totally outstanding today, so if loan is paid off, we can originate more to the same borrower.
Yeah, this is Stu. It's at one time. I mean, we have other programs that we'll go into. So if the fix and flip is done and they decide not to flip, they want to rent, we have DSCR programs. They could roll the fix and flip financing into a DSCR rental program, and in those cases, we have much higher concentrations of like 10 loans to a borrower. So I don't think it will be restrictive. 3 fix and flip loans outstanding at one time. Hope it wouldn't be, but if it is, let us know. We'd consider something else if it was an experienced investor.
Okay.
As I mentioned in the beginning of the webinar, LendSure's started in 2015. We do many different loan types, and I mentioned we're a non-QM lender. We don't do government loans at this time. So some of the other ones we do is foreign national loans, which is loans to foreign nationals that are not U.S. citizens. They're able to travel to the United States, visit the United States, invest in the United States, buy second homes in the United States, and we offer programs specifically to those. We do cash outs up to $1 million. We do non-warrantable condos. So government programs won't do non-warrantable condos. We do non-warrantable condos. We do condo-tels, which is very unique. Many lenders will not do condo-tels. We're doing condo-tels. 2 to 4 units, second homes. We do bank statement programs. We'll do construction takeout loans, bridge loans, asset depletion. If a retiree doesn't have a current source of income but has assets in the bank which they've accumulated, they want to buy a home, we can look at the assets in the bank to support a repayment of the loan terms. We offer interest-only programs, 4-year programs, lease contract options, and we do 1031 exchanges, which is also a very niche product, a lot of work, but we've been very successful at 1031 exchange loan programs and have become very good at it. A little bit why partner with LendSure. I assume many on this call are partnered with LendSure already, and they're learning about this new product that we are rolling out. But if you haven't partnered with LendSure, we have, to start with, we have very flexible based underwriting. About 1/3 of our loans will have a deviation from our published guidelines because we see compensating factors in the file with the borrower, and we make a common sense human decision. We have experienced AEs. We've been in it, as I said, 6 years, and that follows a history of being in the mortgage business for many years. Many of the AEs we have today were with us in predecessor ventures and are highly experienced. We will pre-qual borrowers up front and vet through bank statements, income docs, and other things, and provide you with what we call a pre-qualification process, so you have a good insight as to what the loan terms would be, what the income would be, and how the loan would come together. As I mentioned, we have operation centers and underwriting centers across the United States now, and we actually encourage communication between brokers and our pre-qual underwriters to structure and shape loans.
With that, I'd like to invite everybody to submit their questions if they haven't done so already. I've got lots of questions here that have been submitted so far. First of all, I have a ton of people asking, will you be getting a copy of the presentation and a copy of the webinar recording? Yes. Look in your email in about an hour after the webinar ends, and you're going to be getting an email from me, Rose Waldy, and it's going to have the presentation. It's going to have the recording of today's webinar, and it is also going to have a link to a private label resource kit that has program flyers that you can customize, including the fix and flip program. You can put your logo on it, your contact info, your disclaimers on it, and you could start marketing this great product starting today. So Teresa wants to know, can we loan on 70% ARV with comps?
Can we loan on 70% ARV? If it's still within 85%, I say we will try to get that, to accommodate that. But it's not just about 70% ARV, it's a combination. As I mentioned, our loan has to be within certain parameters on a cost basis and on an ARV basis. So if 70% works for the cost basis, to be still within 85%, then for the good borrower, we can accommodate that. Yes.
Okay. Nilo wants to know, do you have a maximum percentage allotted to how much rehab financing you will do?
Sorry, can you repeat the question? Sorry.
Do you have a maximum percentage allotted of how much rehab financing you will do?
We will do on some loans up to 100% of construction cost, and on most loans we will be up to 85%.
Yeah, Andre, this is Stu. I think Nilo's question was, can you do a loan where 80% of the loan is for rehab and 20% is for purchase? And the answer is yes. There's no limit on percentage of rehab to percentage of purchase. We did one the other day where the home price was, because the house took a lot of rehab, was $50,000 for the home price. The rehab was over $200,000. So 80% of that loan is going to be for rehab. So there's no limiting factors from percentage of rehab versus total lent.
Nilo says thank you. That's exactly what they meant.
Oh, no problem.
Okay. And then Mike wants to know, do you need an actual bid or scope of repair write-up for the appraiser for the ARV?
Yes. To order appraisal, we need the actual scope of work, because that scope of work will go into the appraisal report. It will be part of the appraisal report. and that goes directly into the ARV assumption.
Okay. Jeff wants to know, is there a disbursement schedule agreed upon prior to closing the construction money? And are there typical inspection fees and title rundowns?
Yes, the typical inspection fee is $125 per inspection. Normally, I see that the rundowns are about $50 per the rundown, but some title companies actually charge up front at closing because they know it's a construction loan, so they charge for, let's say, up to 5 future rundowns. There is no, we don't limit the number of draws. On average, we see it's 5, 6 per transaction, but we don't limit them. But as a reminder, it comes at cost to borrower each draw request.
Okay.
Yeah, this is Stu. 1 second, Rose. The other question is, there a draw schedule at the closing? There's not a draw schedule in regards to timing. There is a scope of work, and whenever the investor has the contractors finish an item on the scope of work, they can request that, as Andre said, I think it's $120 inspection go out, and we'll reimburse shortly after the inspection. So it's not like at the closing you have predetermined timing on draws. The draws are totally dependent on completion of the item in the rehab list.
Okay. Do contractors need to be licensed, bonded, etc.?
Yes, we expect that the scope of work will be coming from the licensed contractor. We will allow some work to be done by the borrower, but it's really on a case-by-case basis, and we would like to discuss that up front. If it's to paint a few walls inside, it's one thing. If it's to do, the roof or electric work or plumbing, it's a completely different thing, and we'd expect a licensed contractor to be involved.
Okay. Trisha wants some clarification. She says, I'm unclear to the bullet point run credit if good proceed, but won't run credit until the terms are agreed upon?
Correct, right? So the application form on the personal detail section asks for estimated credit score, if there's any bankruptcy, felony conviction, foreclosures, etc. So that, once we look at the information provided in this application form, it gives us a good idea of the borrower's profile, and we're able to put together a term sheet. And then if client is happy with terms, they sign the term sheet, then we run credit, we run the background to verify that that information is still valid and there's no deviation from what's been provided in the application form. So prior to that, prior to client agreeing to terms, we do not run credit.
Okay. Are gifts allowed on the close of a purchase transaction?
Gift funds are allowed on a case-by-case basis. We would like to, yes, it's possible to work with.
Do you have a construction management company and fee?
Construction management company to assist the borrower, or construction management company that we use to check the feasibility of the scope of work?
She clarified, or she or he, I apologize, construction disbursement management.
We, so when the draw request is submitted, we process everything internally, but we ask for additional help on the inspection side. We send inspector to the property to take pictures of the progress and to provide the opinion of the percentage completion of each line item, and that's where the feasibility inspection company helps us. But as I mentioned, we also ask for the invoices to be provided. So we try to take most of the process on disbursing funds on ourselves, but we don't necessarily work with the construction management company that takes everything from start to finish.
Yeah, this is Stu. Let me add to that is that we're not in the business financing fix and flip to manage projects. We assume the investor is going to manage the project. We assume they're going to oversee it. They're going to oversee the contractors. They're going to do the work that was outlined on the itemization of rehab. And all we're going to do is when that investor comes and says, I put a roof on pursuant to the list of items I was going to do, and that roof was $20,000, and I would like to get reimbursed, $17,000 on the $20,000 roof. We send out an inspector. It's a quick process to look at the roof, inspect it, take 15 minutes, says yes, the roof is on, it was done in a professional workmanlike manner, and we reimburse. But we're not managing the contractor putting on the roof or putting in the kitchen, vanities. That's all up to the investor.
Okay. After the 20% down payment, do you fund the first draw on the construction amount?
The construction works on a reimbursement basis, so we do not expect that the client will cover 20%, and then client should not expect us to cover the rest 80%. It's all on a reimbursement basis. Client's total cost 100,000, our total loan is 80,000. If cost to date is 10,000, then our loan will be 8,000 on that 10,000, right? So as client spends another 10,000, we will reimburse another 8,000. So once client completes the project and spends the last dollar, it's going to be 100,000 spent. At that stage, we will be reimbursing our last dollar on that construction loan, which will be 80,000.
Yeah, it is possible that the roof goes on, the contractor who put on the roof's looking to be paid in 2 weeks. As soon as the roof goes on, there's an inspection of the roof requested by the investor. We send out the inspector, typically occurs within a couple days at best. It gets back to us. We could reimburse for that roof, within 7 days or sooner. Based on the completion, it's possible the investor hasn't paid the contractor yet, and we're still going to reimburse, and then that investor can use the $17,000 to make the payment of the $20,000 to the contractor. So the reimbursement process, as Andre described it, some will use it to not reimburse, but to pay the contractors, but the process is fast enough to do that if inspection is called timely after the completion of an item.
Okay. Are we able to offer this program in states where you are licensed, but we may not be, since this is a business loan?
It's possible. It'd be a state by state specific, so we'd have to see it on the term sheet, and on the application, you should indicate that you're not licensed in that state, and we can check it. It's going to be state by state. Most states will allow unlicensed or not licensed brokers to do investment property, so it's very possible.
Tricia says, so basically this program is targeting experienced fix and flippers, not first timers.
This is Stu again. The experienced fix and flippers are fine, and it's what it is targeting. But if often you have someone has, you can't get credit till you get credit. You can't do your first fix and flip loan till you do your first fix and flip loan. And we do provide financing to first time fix and flip with little experience investors. But recognize if that's the case, you're not going to get the 85% purchase price. You're probably not going to get the 100% on rehab. You're going to get something less to mitigate for the lack of experience.
Nilu says that she has a loan she or he, I beg your pardon, has a loan to submit right now. Go ahead and respond to the email that you're going to get with me from me, and I will make sure that that gets into the hands of Andre and Stu immediately.
Yeah, if you just go to the website, our website, you can send it to Rose, but if you go to our website and just put the application in, it queues us, and you'll see a response in 24 hours.
Do we need to go through our regular LendSure rep for submission of info, or is there a designated email submission process?
On the submission process, we'll tie it to your current rep. If you don't have a current rep, you could note that. But whether you go through your rep or don't go through your rep, if you have a rep assigned to you, it will automatically tag to your rep. I would suggest going through your rep, but if you wanted to submit an application directly, and we'll tie it to the rep based on who's doing the submission.
Are you using the appraiser for the percentage of completed inspections? If not, who inspects?
It's it's an inspection company. It's not an appraisal. It's just feasibility inspection company. They have multiple inspectors in multiple states, and they just send one of them. Typically, it's the same inspector that did a regional scope of work inspection, and person goes back to the property, takes pictures, provides the percentage completion estimates, and sends the report back to us.
Okay.
So it's not the appraisal.
I've got a few questions about compensation. Barry wants to know, is compensation the same as our locked-in comp percentage, and are we paid on the combined loan amount?
It's a borrower paid comp plan. So typically the borrower is at a point and a half, or 2 points, whatever deemed logical based on the transaction, and you're working with the borrower. We can often stack the points. So let's say you're charging a point and a half on a $500,000 loan, and so you're 7,500 comp. We can often stack that point to make it a $507,500 loan, so the borrower doesn't have to be out of pocket for the points that you're charging, and the points are on the total loan purchase and rehab.
Okay. Teresa wants to know, can you pay YSP on flip deals?
We are not raising rates here to pay YSP, if that's the question. If it's a transaction where you say, LendSure, would you add a point and a half to the transaction and pay us a point and a half in yield spread premium, we could do that through us adding a point in a discussion. But we don't raise any of our rates to pay YSP on any of our programs. We have a YSP program that is created where we originate a loan with points that we charge designated for YSP, and we stack those points. The borrower doesn't come out of pocket, but the borrower's rate is an increase for the YSP.
Okay. Mario wants to know, on a fix and flip, if the borrower does a couple of deals, is the broker protected from the borrower going direct to LendSure on the next deal?
It's never had that question. Yeah, I don't think that will be an issue. We can track the borrower to broker, but sometimes borrowers go to other brokers, and I don't know what happens then. Borrowers are hard to align. But if a broker brings in a borrower and they do 2 or 3 deals, and that borrower comes direct, I don't mind tying it to the same broker. Now, if the borrower comes with another broker, I'm not sure how I can police that.
Okay. Do you require monthly IO payments for this, or do you establish an interest reserve account?
We require monthly interest payments, interest-only payments.
Okay. The stacking on this is huge. Thank you. I'm not sure. Do you guys want to address that issue on stacking?
No, I think I did, and I think the person's saying that's very helpful, that the borrower doesn't have to come out of pocket for the broker points.
Okay. Can we have all fees for these loans, underwriting, appraisal, flood cert, etc.? Is it an open closing attorney list?
On our end, we work with a specific attorney team that, again, specializes in this type of deals. On clients' end, we do not enforce who's the attorney or the title company. We expect client or the broker tell us which attorney and which title company are working on the client's end. And in terms of the fees, I can list them right now. It's $15.95 underwriting fee. It's $195 for the scope of work feasibility inspection. It's $15 flood search, $50 for credit report per grantor, and our third-party legal team charges $1,050.
Okay,
So the fees are not untypical for a mortgage transaction. The unique thing here is that our underwriting fee, which Andre mentioned, $15.95, that covers the LLC too. Often lenders will charge an LLC fee. That's included in this because most of these transactions will be through an LLC entity.
Okay. What is your max cash in hand for asset depletion cash out refinance?
No, so you're on a non-QM now?
I'm not sure. Christopher, do
Yeah,
you
I
want
think
to?
you're not talking about a fix and flip loan. You're talking about non-QM.
Yes, he says yes.
Okay, and the non-QM is you're talking about DSCR?
He says non-QM.
Okay, well
Christopher,
we have
go ahead.
4 different programs, so each of the programs will have a little bit different cash out depending on whether it's a super prime program or the highest credit worthy or a DSCR program.
Okay.
Typically it runs $500,000 to $1 million depending on which program. Maybe that answers it.
Okay. Do you need a new app for every property for an investor that has closed a prior deal? Do you need a physical inspection interior every time? Do you need a credit check and proof of assets for every application? After the first app, I would think that you would only need an address and scope of work. That's coming from Hanesh.
It's a good question, and we probably will improve our application in the future for the returning borrower. Maybe we will be able to do that. But today, unless you tell me who the borrower is, I wouldn't be able to just guess without the information provided in the application. If you just provide me the property address and then first and last name of the borrower will be blank, I wouldn't be able to just guess that it's a returning borrower. So unfortunately today, yes, the personal detail section will still be asked for in the application process. In terms of the credit, the credit, the date of the last report needs to be within 90 days. At the time of closing, it needs to be within 90 days. Can you just remind me what was the rest of the questions?
Oh, I'm sorry. Once I asked it, I deleted it so I don't ask it again. My apologies.
That's fine.
I think you got it, Andre.
Okay.
Okay, and Mario, you're asking very specific things, so I'm going to connect you with Andre and Sue after the fact. And Michelle, thanks for that idea about a video showing the process. I think that would be very helpful, and I will start working on that. And I think that is it for these questions. If there, if anything else comes up, please go ahead and reply to the email that you'll be getting in about an hour, and I will make sure that everything is addressed, or if anything comes up after the fact. I want to thank everybody for joining us today, and Stu and Andre, any last words to our audience?
We really appreciate you've taken the time to learn about our fix and flip product. I think it will be a very useful product in the upcoming market we're about to see, and we look forward to serving you.
Thank you. Andre?
Thank you. Everyone, thank you so much for joining us today. Yeah, hope to get some applications from you.
Awesome. Thanks, everyone.
Thank you.